This is Krishna here from KNAV, and I'm here to talk about the capital gains tax provisions which are proposed to be amended under the finance bill which is proposed as part of the Union Budget 2023-24. The first amendment is in relation to Section 54 as well as Section 54F of the Income Tax Act. There is now a cap of 10 crores which has been proposed to be implemented. Effectively, the provision will be applicable to the HNI category considering the high threshold limit. By and large, if you look at the rationalization of provisions of increased surcharge which was applied to HNIs as well as limiting the VPF contribution to a certain limit, this provision is in resonance with the earlier provisions. The next provision is in relation to amendment of conversion of gold into electronic gold receipts and conversion of electronic gold receipts into gold. The provisions are now sought to be made an exempt transfer, and effectively there will be no tax payable on conversion of gold into electronic gold receipts and electronic gold receipts into gold. This provision makes natural sense considering the amount of gold which is imported by India, and India being one of the leading importer of gold. What then happens as a consequence is that on a future transfer of the resulting asset, the period of holding of the initial asset will be considered as the holding period. The next change is in relation to market-linked debentures, and any income arising out of the transfer, redemption or maturity of the market-linked debentures will now be considered as a short-term capital gains and will be taxed at the appropriate rates. Thereafter, there is a change in relation to interest on borrowed capital, whereby any interest which is paid on property which is acquired or improved, and thereupon any deduction which is claimed either under the provisions of income from house property or under the provisions of Chapter 6A of the Income Tax Act will now not be allowed to be included in the cost of acquisition or cost of improvement of the asset. Thereby, it effectively reduces double claim of deduction of the same expense. The last provision is in relation to movement of funds into IFSC or GIFT City. Effectively, the sunset provisions have now been extended to 31st March 2025, as well as exemption has been sought to be made in relation to distributions which are made by offshore derivative units. While all these changes have been made, this amendment seems to be a case of a mixed bag, especially considering the lost opportunity to rationalize certain other provisions. If we consider the parity which does not exist between residents as well as non-residents in terms of the rates of tax applicable, as well as in terms of the various thresholds which are applicable for 12 months, 24 months, as well as 36 months for various classes of assets, this was a good opportunity to simplify and rationalize all of those capital assets and the capital gain provisions as well. And more so considering the fact that these amendments, there have been several amendments in the last 5 to 6 years. We can only hope that these amendments are covered in the coming budgets. Thank you.